Welcome to Real Estate Radio Power Investing, an informative and engaging hour discussing everything you need to know about the world of real estate investing. Your host, Tom K. Wilson, provides you with insight and guidance from his years of experience as a successful real estate entrepreneur on how to buy, sell, finance, and invest in real estate, and much more. Now, here's your host for Real Estate Radio Power Investing, Tom K. Wilson.
Thanks so much for tuning in to our Real Estate Power Investing program, where we empower you with the education to maximize your investing success. We're broadcasting from the #1 business radio station in the San Francisco Bay Area, KDOW AM 1220, the Wall Street Business Network. I'm Tom K. Wilson, your host for this weekly program on real estate investing. If you can't make the live show, you can catch your podcast on TomWilsonProperties.com or on iTunes or on YouTube. Go to TomWilsonProperties.com and sign up for our weekly newsletter that keeps you posted on economics and the news as it relates to real estate. Also gets you on our client base, which allows you to have access to many of our commercial syndication products that are only available to our client base, where you can buy shares for typically $50,000 in commercial and multifam products that normally only large investors or institutional investors can afford or qualify for. On the website is a lot of investor education information, so we invite you to go to it. And also, we always welcome, of course, your questions and suggestions for future topics. Today, we have Dana Samuelson on from that we met recently at the Summit at Sea of the Real Estate Guys. Dana's got a BA from Washington Lee University. He's president of the Professional, hope I say this right, Numismatists Guild, an exclusive nonprofit organization composed of the world's top rare coin and paper money experts. Dana was a personal protege of James Blanchard, who was a major influence in re-legalizing the private ownership of gold. And he has a company called American Gold Exchange. And Dana, welcome so much to the program.
Thank you, Tom. It's wonderful to be here with you.
And we certainly had a nice time together there on the Summit at Sea. I think that was that your first or second time, Dana?
That was my first Summit at Sea, and it was a wonderful trip, a lot to learn about real estate. I've got a few doors myself here in Austin, Texas, and the people on the cruise were just great to meet, and you're one of them, Tom.
Thank you so much. I feel the same way. So Dana, tell us a little bit about your background and how did you get into gold?
Well, I got out of college in 1980 when interest rates and inflation were sky high. It was much like the employment time of 2009, and I had a German degree. I was basically unhireable, but I had a brother who was in the coin business, and he got me a job working in a vault in Houston, Texas, counting, weighing, shipping, and receiving. So I literally started right at the ground floor in a vault because I could be trusted. And after 2 years working there, I got an opportunity to go work with Jim Blanchard in New Orleans at the largest mail-order coin company in the country at the time. And they taught me how to grade old coins, old U.S. silver dollars from the 1800s and $20 gold coins from the 1920s. I became an expert coin grader. And that's kind of how I learned the craft or the trade. And when the coin buyer would go to coin shows, I'd go up to their business office and run their trading desk for them. So I ended up becoming the trader for Jim Blanchard and his senior trader, and I got to spend about $50 million of his money every year buying product for the company, and I got to know everybody in the business through that.
For those who don't know, Dana, for those who don't know Jim Blanchard, just briefly give his background.
Well, Jim was a history professor, and he got into a car accident in 1968 or 69, and he broke his back. And it changed his life in that he knew that he needed to do something different. And at the time, Nixon had just become president, and in 1971, Richard Nixon took the U.S. off the gold standard, which meant that for every dollar that was printed, the U.S. had to have an equivalent value in an ounce of gold in Fort Knox. And Jim knew that this was a way to turn good money into bad money by not having it backed by precious metals anymore. So he would go on to television stations with an ounce of gold, which was illegal to own, and tell the people, come arrest me. I have this ounce of gold, and it's illegal to own. So he started a committee the National Committee for Monetary Reform was what it was called at the time, and he helped get private ownership of gold re-legalized in 1974. And at that point in time, people asked, okay, where do we buy it from? And he said, well, I'll sell it to you. So he started his own precious metals company. And by 1980, it was the biggest one in the country. And he was an amazing man who had energy and insight and saw the future. I mean, he understood that the inflationary prospects of going off the gold standard were high, and that's exactly what we got in the 70s, was a very inflationary environment as a result.
So Simon Black, who is on with us this year again, has shown in the past a video that summarizes how most major empires historically have collapsed after they converted to a paper system, which we call fiat money.
That's correct. Anytime a major civilization in history has debased the currency by taking the precious metal out of it, it's usually been the start of the end of that power. And the world went off of gold as money in the 30s, and there were still silver coins as currency as late as the 60s and 70s, but that all ended with the silver run-up in the late 70s when silver went to almost $50 an ounce. That took the silver out of the currency, and we've had nothing but a debt explosion ever since, especially in the last 15 years. So there's so much more paper money and paper value than ever before in the world. That's why gold is a good insurance policy for the rest of your money at this point in time. It's the only asset, or one of the only assets, that isn't simultaneously someone else's liability. Real property is another if it's owned free and clear. And in times like now when there's such high debt and low or even negative interest rates, gold is an important part of your portfolio for hedging your investments and a counterbalance against problems that this debt might bring.
We're going to talk a lot in this program about metals and why you should consider it and what's the best way to own it and so forth. Before we get into some of those details, Dana, let's talk a little bit more about our economic situation that is really leads up to the reason that that should be considered. So do you agree with Peter Schiff that the crash that we just witnessed in 07-08 could be less than what's ahead?
I do, and I do for this reason. What was too big to fail in 2008 is now, for lack of a more eloquent way to say it, too bigger to fail. Mm-hmm. We, instead of Bear Stearns or Lehman Brothers failing, which is what happened then, we have fewer banks with more assets now, and we have much more governmental debt. So my concern, and I'm sure that this is Peter's also, is that if we have a break again like we had, it won't be a company, it'll be a country like Venezuela or Greece or perhaps Italy, whose banking system is in trouble. So if we have a weak economic situation, and one of these countries gets in trouble, we could have a currency default, which I think is the biggest risk internationally now if that situation ramps up again.
What would that look like? What do we? How would you anticipate it, or is it impossible to know when? So you'd better prepare now. And then the second question is, how do you tell when it's getting getting bad enough to really worry about?
Well, the conditions for that to occur are there. I mean, we're ripe. It's just, can we grow our way out of the debt that we have? And I don't see political will or fortitude that's strong enough to reduce the debt in a meaningful way. So I don't think that's going away. If you look at Venezuela, for example, they've been having rampant inflation because they don't have a good economy. And I heard on a national public radio report the other day that $1,000 in Venezuela in 2013 is worth about $5 in Venezuela currency today. So that is something that could happen, is a country's currency could collapse.
Now, in their case, ironically, their economy is tied to a real tangible asset, but oil, I think it's like 90% of their exports are oil.
Correct.
But of course, they don't control the price of oil. The market does, and if the world market drops, then all of a sudden, most of what their values tied to is drops too. Do I understand that right?
Yeah, that's exactly what's happened. This last oil downturn really hurt them, and it hurt Russia too. But the oil price has since climbed back up into the 40s and 50s, which has helped. But oil under 30 is good for anybody in the U.S. who's driving a car, but it's bad for every country that is dependent upon oil as a revenue stream, and Russia is one of those countries.
Mm-hmm. Okay.
So, to have a healthy world, you've got to have economies that work pretty well and can service the debt that we have right now, and that's really the bigger issue, is the debt servicing.
So to what degree are we surviving because we're the best-looking horse outside the glue factory?
To quite a high degree, actually. The dollar is the world's international currency. So that has allowed the U.S. to have much more breathing room in terms of inflation or currency volatility than other countries have.
Doesn't solve the problem, but it allows us to kick the can down the road a little farther.
Right, and it mitigates the volatility of the oscillations of currencies going up and down because we are the currency of record, basically. Mm-hmm. But we're being challenged. The Chinese want to challenge that going forward. The euro is actually looking a little bit better because the Eurozone is starting to gain some traction economically. The dollar has been the strongest currency in the world for the last 5 years, and we've had a really beneficial effects because of that. But now the dollar is starting to roll over again, and this is an environment that's actually pretty good for gold when the dollar weakens.
All right. More about metals with Dana Samuelson when we come back. He's president of the American Gold Exchange, and we're talking about metals today and the economy, and should this metals be a part of your portfolio. So stay with us here, and we'll be right back on Real Estate Power Investing.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit TomWilsonProperties.com. That's TomWilsonProperties.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
Pleasure to have Dana Samuelson with us today, a rare coin and metals expert, and we're talking about the economy and its effect and impact on your decision to include metals in your portfolio. And we're talking about our economy and how we're kicking the can down the road, in part because it is relative to other economies, we're not as bad as some, and that's enabling us to keep up some addictive bad habits. Is that one way to put it, Dana?
Yes. As I said before the break, I don't know if we have the political will, or if any country does, to really deal with the debt that countries have in a meaningful way at this point in time. And we're trying to grow our way out of the debt, and really the only way to pay that back is in higher inflated dollars, which means the debt is less when you have inflation, which is what governments want right now. But when you also have high debt loads like we do, getting GDP to be 3 or 4% is much more difficult than when you have a lower debt load like we did back in the 80s when that was more commonplace GDP to expect. The U.S. has had GDP in the last couple of years of 1.5% in 2013, 2.5% in 2014 and 15, and 1.6% last year. And our first quarter was anemic at 0.7%. So I don't think we're going to see the days of 3 and 4% GDP anytime soon carrying the kind of debt load that the U.S. carries right now.
Are we at risk of losing the world reserve currency?
Not in the short term, no. There's not a good, viable alternative. The euro is a good competitor. The yen is a good competitor, although Japan has debt that is much higher than the U.S. per capita. And the Chinese certainly are coming on strong. They want the renminbi to be a world currency, and they're working towards that, but they don't have the transparency that their financial system requires for the world to accept that yet.
Chief economist at Fannie Mae is quite concerned about Japan at 250% of debt to GDP. Are you concerned about that and what its impact might be on the supply chain for other manufacturing countries?
Absolutely. During World War II, the U.S. GDP debt to GDP ratio got to 100%, and that's the highest it's ever been until now. And Japan has 2.5 times that at 250%. So you're entirely correct. I call Japan the canary in the coal mine for this kind of a debt load. And if they start to have problems, it's just a precursor for what could happen elsewhere. And it could be that domino, the first domino that goes. And the world is so interconnected today. That's really the bigger problem. We're so interconnected. We don't have insulation like we used to.
And Japan would be probably a lot more relevant canary than say Greece or Venezuela. Wouldn't you agree?
Absolutely.
Yep. If you were czar, what would you do right now?
If I were czar,
financial czar, yeah.
Well, we've got to control government spending, and we've got to grow the economy. I do think that we need an infrastructure spending program. I think that'll help. And I would like to see taxes come down a bit, but we've never had the kind of debt loads in a modern economies like we have now, and I just don't know if there's a way out of it. I'm not an economist, so I don't know all the solutions. I'm a humble precious metals and rare coin dealer and expert, but with the kind of spending you have, if this were personal households, we'd all be bankrupt. It just doesn't work. When you can print money, you can get away with it, but we can't as individuals. So the last time we had a balanced budget for 1 year was in 1998 or 1999, and we haven't had one since. And at a point in time, the U.S. economy was strong. And Bill Clinton established that he actually went through the budget every year and nickel and dimed it down until he got it to where it could be a balanced budget. But the government has gotten bigger, and more importantly, the U.S. government is the backstop financially now for the whole world. That's what we did in 2008 and 2009. And, I don't think we can do it again.
We have Dana Samuelson with us today, an expert in rare coins and precious metals, talking about the economy and what it tells us about what we should do. We'll come up with some solutions and suggestions for you on next. Stay with us with Dana Samuelson.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit TomWilsonProperties.com. That's TomWilsonProperties.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
Our topic today is precious metals and the economy, and we have Dana Samuelson today, an expert in that area of rare coins and precious metals. So, Dana, we talked now so far in the program about the economy, the problems we're in. I presume that you feel that if we, if things start to unravel, we have a high risk of going into high inflation in this country?
Yes, via currency depreciation, actually.
Okay, and in that case, of course, the one thing that's keeping us from raising rates is the fact that we could not afford our own debt service, right?
That's correct.
And so how does that play out? How is it that if we're going to keep interest rates down so we don't pay or don't have too high a debt service, what is it that will take the lid off of that and force it to inflate?
Well, we can't afford to raise interest rates because the debt service will be too high, but we have to grow the economy. And I just don't see how we can do that with the way the current situation is. So what would that? So what would happen so that effectively we're inflated just by the value of the dollar going down? Well, we want the economy to grow.
Right.
The Fed wants inflation, but we're caught between a rock and a hard place. So if my concern is if we start to go backwards again, then we will have the kind of defaults we talked about, which is why gold is a good thing to have as an insurance policy. That really is how I think your listeners should look at gold as an insurance policy. And the reason is it's the currency of last resort in times of trouble. Between 2008 and 2011, when everything else was plummeting, gold almost doubled in value. So if you had 10% of your assets in gold in 2006 or 2007, when everything was going well and the crisis hit, you would have had that money become double in value by 2011. That's exactly the kind of function that gold has as an emergency insurance policy for the rest of your assets.
Do you think that the script is already written, and even having a pro-business capitalist in like Trump, that he's really between a rock and a hard place, and there's not but so much he can do?
Well, it's taken us, 40 years to get to $20 trillion in debt. I don't think we're going to have this debt go away anytime soon. It'll take 20 years of hard, concerted effort to get us anywhere close to a balanced budget again. And I just don't see that happening. I just don't see it happening. So a currency default or a devaluation, I think, is inevitable at some point in time when things get tough again, when we go into a recession again. We've had the weakest expansion that we've ever had. It's 8 years long now, and it's a little long in the tooth. So even a mild recession right now is troubled because the Fed doesn't have the tools in their toolkit to effectively stave it off like they did before. I mean, that's how our debt doubled. And it's printing money, and printing money is diluting the currency's value, and hard assets like gold do very well in that environment. That's why it's a good insurance policy to have.
Okay, we're going to talk about that, the gold and silver in your portfolio, and how to have it and in what form here in just a moment when we come back from the break with Dana Samuelson, expert in rare coins and precious metals. So stay with us on KDOW 1220 AM, Real Estate Radio Power Investing. We'll be right back.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit TomWilsonProperties.com. That's TomWilsonProperties.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
Talking about metals today, precious metals, and the reason to consider them in your portfolio is because we have impending financial crisis in this country, and that maybe we didn't see the worst of the crash before. So Dana, what if someone is going to have metals? I guess you have clients that are hoping that prices go up, and they want to buy metals for that reason. And then you have a lot of others who really hope it doesn't go up, and they're buying it as insurance policy, right?
That's correct. There's gold investing and there's gold insurance. So if you're an investor, you want to try and buy the dips. You want to look for an uptrend, which I believe that we're in now. We've been in one since December 2015 when the gold price bottomed at $1,050 an ounce following the Fed's first rate hike in 9 years. So we're in a choppy market, though, because the markets right now, all markets, are very reactive to politics because we don't know what the Trump administration's ability to deliver on health care will be. We're waiting to see what that manifests itself. Also, tax reform and infrastructure spending. So everything's been reactive to that in the short term. So as an investor, you want to try and buy the dips if you're a gold investor or a silver investor. But if you want insurance, there's really no wrong time to buy except for the extreme highs like we've had, but we've already had a major correction. So it's a much safer time to accumulate a gold or silver insurance policy. And, I mean, that's what governments around the world are doing. The Chinese are buying gold at a record rate as a country, and they probably have about twice as much physical gold as the U.S. does now because they want the renminbi to be a strong currency going forward, and they want to have something to back it. It's not to say that they're going to tie the renminbi to gold, but having gold as an insurance policy against future defaults for other countries is a good thing, and that's what they're doing as well. So for your investors, you should have 5 or 10%. Any accountant will tell you that's a reasonable, or financial advisor will tell you that's a reasonable amount of your assets that you should have in gold and silver.
Just real briefly, just list the different ways one can own gold and silver. Well,
there's a lot of choices right now for physical gold, which is what I do. I'm a physical gold dealer. My company, American Gold Exchange, has clients all over the country. Our primary gold vehicle for most U.S. investors are 1-ounce U.S. gold eagles that are minted by the U.S. Mint since 1986. They're the most popular gold piece in the United States. The second most widely traded and recognized are Canadian 1-ounce gold maple leafs, which the Canadian government has been making since 1974. So in terms of ice cream, these would be vanilla and chocolate, the two most popular physical gold coins to own.
Now, what's the advantage of having that way versus just going online and buying an ETF or buying gold in a security?
Well, you can have, if you're a trader, trading gold through the paper vehicles is a way to do that. ETFs are fine. That's more for an investor who wants to trade it on paper and have easy in and out ability.
Okay.
Physical gold is a bit more cumbersome. So owning physical gold requires storage. The premiums are slightly higher for physical gold than ETFs, but there's nothing like having some physical gold around in times of trouble.
Where should people put it? What are the choices?
Well, it used to be safe deposit boxes, but that is waning a bit. If we have banking problems, you may not want to have it in a safe deposit box. The rule of thumb is you want to have it somewhere safe and somewhere you can sleep at night. A lot of people have home safes. That's a way to go. In extreme situation, we've even seen people bury this stuff in their backyard. It's very durable.
Yep.
So,
what about offshore?
Offshore is a good option. That's been increasing. Switzerland's a good place. There's Singapore and Taiwan, I think, have good storage facilities now. You have to look at value going out of the United States for the Patriot Act. There are regulations there that might present a bit of an issue for some of your people, but if they have the wherewithal, having some of it offshore is a good idea.
Mm-hmm. So I guess you got two problems, right? If you feel like you things are bad enough, you want to leave the country, then you don't want to have to be carrying it with you.
No.
But if you're staying here and you need it and it's offshore, then it might be a problem getting hold of it.
Correct.
So, of course, one could do one of both, right?
Right. So people with real means will have some here and have some elsewhere.
Okay. Above coins, what would be the other options other than coin form?
Well, there's bars. You can buy 1 ounce bars or 10 ounce bars or kilogram bars, but we've had some counterfeiting with bars, which is becoming a bit of a problem. Tungsten has almost the exact same density as gold, and we have seen some fraudulent bars that are tungsten bars plated with a very light layer of gold. And we've had problems with this coming out of China through some of the online selling platforms. So you have to be careful. If you're going to buy physical gold, you want to buy from a dealer that's been in business for quite a while. P&G dealers for the Professional Numismatists Guild are some of the most reliable and long-standing dealers in the country.
How long has American Gold Exchange been around?
I started the American Gold Exchange in 1998, so we're in our 18th year now.
Okay. All right. And what about platinum?
Platinum, I really like platinum price-wise right now, and for this reason, it's trading at a $300 discount to gold, which is abnormally cheap. For most of my entire career, platinum has had a 10 to a 25% premium to gold. It's about 10 times scarcer physically. It has been undervalued for the last 2 to 3 years. It's very popular in Asia, and demand in China and Japan has just been way off in the last couple of years. So platinum to me is a steal at a 22 to 25% discount to gold. You can buy it in 1 ounce U.S. Platinum Eagles or 1 ounce Canadian Platinum Maple Leafs. Again, we haven't had any problems with platinum bars that I know of, but I wouldn't be surprised if that starts to happen. So Stick with the major manufacturers.
We'll be back with a wrap-up in just a moment.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit TomWilsonProperties.com. That's TomWilsonProperties.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
So, Dana, you like, for insurance, you like holding the tangible physical product. You like gold, you like silver. Right now, you feel platinum, as of the time of this program in May of 2017, it has a advantageous value to purchase. Is that right?
Yes, I just think it's relative to the other metals, it's undervalued by quite a bit.
Is it as accepted as a currency value, intrinsic value to the marketplace? Yes,
but gold will always be the currency of last resort. Gold functions as a way to hold real value and transport it.
All right. If the world collapses, and I've got some tangible assets like real estate, which I think you like as well, but you need to have things that you can spend as well, and you've got some gold and silver, maybe platinum, but I need to go out and buy lettuce. How do I do that?
Well, silver is actually your currency of last resort. So I would encourage people to have 1 ounce silver coins, again, from the U.S. Mint or the Canadian Mint, or even the old dimes and quarters that the U.S. Mint made up to 1964. They have a white edge around them, not a copper nickel edge like modern currency that doesn't have any silver in it. That's a great way. We call it junk 90% silver.
Okay.
And that's cheap. There's no premium to buy it. It's already made. We just have to weigh it and count it and make sure it's good.
Okay. Then if folks want to know more about, have questions and know more about your company and business, how do they reach you?
Well, our company, again, is American Gold Exchange. We're located in Austin, Texas, and our website is informative. We have transparent pricing. It's www.amergold.com, Amer Gold. And all our products are on there. And we have a lot of information on there about the markets as well. We post a daily gold update, and we do regular market commentary as the markets dictate we need to.
Okay. Great input. Dana, has been great having you on the program today. We'd love to do that again sometime in the near future. And we'll certainly, if folks connect with us wanting to know more, we'll direct them your way.
Thank you, Tom. It's been wonderful talking to you today.
Thank you. So remember to go to TomWilsonProperties.com. You can get this podcast if you aren't listening to it now from that, and you can hear podcasts from all of our other guests, including Robert Kiyosaki, Dr. Doug Duncan, Bruce Norris, and lots of folks who are experts in their field, educating us and bringing us great information to help us make better investment decisions. And go sign up on TomWilsonProperties.com for their weekly newsletter that brings you economic news that's relevant to your real estate investing decisions, and that also will connect you up on our client base, which will give you opportunities to see products that we have that we're syndicating that for $50,000 or so you can be part investor in a large commercial syndication product that normally only institutional investors can afford. So thank you for being with us today on Real Estate Radio Power Investing. And remember, the only thing that matters is what you do next. See you next time.
I've got the power.